Coming up today, stocks finished the day lower. The latest IPO to hit the market, Apple bounces back, GPT-5 just got released, NASA to put a nuclear reactor on the moon, healthcare stocks get slammed, and everything else you need to know today. It's going to be a good one, guys. Let's go. And welcome back to Click Capital, everybody. I've been away the last couple of days on some unrelated business, but I have been paying attention to markets. And once again, we've got a few interesting developments happening out there today. Getting a raft of earnings coming through. On some key retail favorite stocks today, I'm going to show you, along with why healthcare stocks are getting slammed this week, why Apple's bounced back the last 2 days, and we'll also take a look at the overall market and whether this bounce can be trusted or about to roll over again, and what could be the catalyst that causes that. Just looking at the fear and greed index, we've just lost the greed zone, gone back into neutral. As investors are not so sure what to make of this rally now, we just got the latest AA investor sentiment survey with the bears back in force, 43%, and the lowest bullish reading we've seen in over a month. And it's interesting because the market is almost following the late 90s step for step. In fact, looking at a price analog from March 96 to January 01, we're currently tracking at a correlation of 97%. It's remarkable. That sharp sell-off we had at 98 also gave us a big V-shaped recovery, but the market did keep on drifting higher for about another year and a half. And here's a look at the S&P 500 today, just closing above 6,300. We are getting a bit of a bearish divergence in my indicators here. Ever since that bearish engulfing last week, been a little bit of a loss of momentum. Then we finished real heavy there on Friday on big volume, and we've just bounced a little bit and been holding that bounce this week. At the same time with volatility pulling back after it also shot up there on Friday, almost hitting 22. And bond yields also stabilizing after the 2-year came off really hard on Friday. Just been coiling up and consolidating a little there this week. But stick with me because later on I'll show you what's actually looking good on the charts today, which are assets outside of stocks. It could be a bit of a rotation going on after we have had just this massive recovery in the stock market, along with Wall Street chasing it as usual with their year-end price targets, creating a huge amount of whipsaw, which has been felt by a lot of investors, especially trend-following hedge funds, likely bailing out of long positions in March and April and getting short only to get whipsawed by this sharp recovery. They're having their worst year in over 25 years. And because no doubt we all felt the threat of extreme tariffs, something we've never experienced before, there's also still persistent signs of weakness out there in the economy with the labor market, a lot of consumers still struggling, dealing with structural inflation. But there's been a big shift since 2020. Thanks to Jay Powell and his buddies flooding the system with trillions of dollars in new currency, helping to inflate assets across the board for the benefit of those at the top at the expense for those at the bottom. And that's why the US economy now depends on the consumption by the rich. So spending for the middle class has pretty much just kept up with inflation, but the top 20% have increased their spending by 50% in the last 5 years. And in fact, it's not shown on this chart, but the top 10% of American consumers now account for half of all consumer spending. So as long as they keep spending, they can pretty much help keep the economy afloat. But there's also other things going on, like optimism over new companies and industries, retail investors at all-time highs with record volumes coming into the market, and a really hot IPO pipeline. We just got another one today, Firefly, which, just looking at their website here, so they're the first commercial company to successfully land on the moon. They've got upcoming launches for missions for Lockheed Martin, US Space Force, NASA, and more. Currently working on multiple missions to the moon, and once again showing the space sector is hot. Not to mention new stocks in general. Ones we've seen recently, Figma, Circle, CoreWeave, all doing really well straight out the gate. And so did Firefly. IPO was priced at 45. It opened at 70 today, sold off a bit into close at $60 a share, but it's got a pretty cool ticker, Fly. No doubt this could become another retail favorite. Just moving on, we've got a big bounce back in Apple the last few days after they just came out and announced a new $100 billion commitment to invest more into American manufacturing, taking it up to $600 billion. Interesting to note they're going to focus on R&D, silicon engineering, software development, and AI and machine learning. Succumbing to pressure from Trump to boost their investment into America, otherwise face the threat of higher tariffs on goods related to making their product. And just interesting to see that the market responded really favorably to that. It's not worried about a higher cost basis, probably also relieved that they're not going to be penalized, but obviously the news gave the price a boost, breaking out of a multi-month range here on pretty strong volume, and that was after their surprisingly good earnings result last week as well. And it was also interesting to see in their promo video that they released when making this announcement yesterday, they also featured the Mountain Pass mine in California from MP Materials, the only rare earth mine in the States, and that helped to push MP Materials higher, and we just got earnings from them coming in with a healthy beat, sending shares further up after hours. And that news yesterday was good enough to give a strong bump up for my position in the sector, Idaho Strategic Resources, which claim to have the largest amount of mineable rare earth deposits in America. They already mine gold and silver. As this sector continues to heat up, one of the strongest in the market at the moment. And just moving on to earnings, we're in the thick of it. Getting a number of results today. One stock we follow around here, SoundHound AI, which use AI to offer voice-based customer service options. And they're saying consumers are becoming less averse to talking on the phone with computerized customer service agents. And that's because pretty soon we won't even know the difference. The AI is getting so good. Or restaurant drive-thrus, customer call centers. I mean, you already see it across most websites with AI chatbots. But this is definitely one of the first industries AI is disrupting. Customer service. And so we got a pretty good result there for SoundHound AI today. Beating expectations, boosting guidance, and the market is actively rewarding that after hours as I speak here, up over 10%. Another stock I follow, Uber, came in with good results yesterday. Still growing, healthy double digits. Announced a huge $20 billion share buyback, which is equivalent to 12% of their market cap. And coming through with even better growth for Uber Eats, 25% year over year. Very healthy margins at 40%, and their cash flow has been up and to the right this last year, turning into an absolute cash machine. And what's most impressive is their growth in their premium Uber One membership, up 50% in the last year. And I'm an Uber One member myself. Pretty good program. Pay $100 a year. Then you get most deliveries free. And even with small discounts on the price as well, kind of just creates loyalty to the app. And even though the market gave a pretty muted reaction to the result yesterday, you can often see that kind of a delayed reaction to it. But I wouldn't be surprised to see Uber break out to all-time highs in the coming days or weeks, especially with that huge buyback. 12% of market cap is material. They're in there gobbling up shares every day themselves. So I continue to believe and stay invested in this company for the long term. It was also interesting to see Shopify, which provide an e-commerce platform for online businesses to operate, saying they're not seeing a dent in consumer spending from these tariffs. Also heard a similar thing from Amazon and eBay. And their key indicators on the US consumer, especially Shopify, which is a bit more discretionary in nature, coming through with a really healthy beat and guidance. Market loved it. Shot shares up 22% yesterday. And kind of a similar move to the often forgotten eBay, which gives us a bit of a tell on consumer spending. They came through with a beat. And again, market shot them up almost 20%. And just going out to a monthly chart on this, quite an underrated and under-discussed stock. It's actually been a great performing stock for shareholders, and still only with a market cap of $42 billion. And at one point, they were a similar size to Amazon in the late 90s. And you kind of think of it as like an online classifieds website. People listing items to sell. It's always going to be there. And just a fraction of Amazon's market cap at $2.38 trillion. We've got other hot online stocks like Duolingo. They offer an app which helps users learn a new language. And of course, they're integrating AI, helping to drive strong results. Coming through with a really healthy beat, 55% above expectations. Market did gap up significantly, but came off a bit in the regular session, still up almost 14%. And there's a look at the earnings leaderboard from other results we got out there today. Still mostly green with a few misses. Moving on, we just got news that OpenAI just released ChatGPT version 5, claiming this latest model boosts GPT to a PhD level. And I've already tested it out. It is definitely faster, catching up to Grok in speed and delivering very thorough and detailed answers. It's kind of amazing what they can do now. And here's a look at the announcement on their website, GPT-5. And so these chatbots are evolving from just simple answer machines to being able to do a lot of online work, administrative tasks, spreadsheets, building websites, apps, coding, can even create simple games. And so the key to becoming good at AI is not just using it, but being good at using it, being really good at using prompts. And our GPT can more and more remember things about you and who you are. You can even ask it things like, based on what you know about me, what do you think about this or that? And so you can kind of think of it as your collaborator or assistant or expert guide in making decisions. And so no doubt OpenAI is going to be one of the hottest IPOs of our lifetimes when it comes onto the market. But that's also creating a huge amount of demand for electricity, which powers these data centers that run these chatbots. And hence why the nuclear trade has got so much momentum, both fundamentally and technically in the market, because industry experts are continually lifting their forecasts from the amount of demand coming from data centers for electricity. The price of electricity is likely to go up in the next couple of years due to increased demand, and the federal government is really getting behind it. We just heard yesterday from the Secretary of Energy that nuclear is the single biggest issue he works on. They're aiming to have 3 next generation reactors by next summer. And there's an ETF for that, the Exchange Traded Concepts Nuclear Renaissance Index ETF, under ticker symbol NUKZ. And just going out to a monthly chart on this has been on fire ever since it came onto the market in January last year. And just looking underneath the hood at this ETF, it's quite diversified, 73% of assets in North America, its largest position in the world's largest uranium miner, Cameco, and a few other hot nuclear related stocks in here as well. And this was on the back of news we just got out that NASA is planning to put a nuclear reactor on the moon by 2030 as the moon economy continues to heat up, especially with Firefly coming onto the market today and others like Intuitive Machines going there. The moon's likely to become a launch pad and truck stop for further space exploration going forward, but also very important because there's similar plans by China and Russia to set up a base on the moon for which they could potentially declare a keep out zone along with restrict airspace. So there's a bit of a race on to set up bases on the moon, which we could very well see in the next 5-10 years. And we did just get earnings out from Rocket Lab, come through with a pretty sizable miss actually, but the market's not punishing them too hard after hours as I speak, only down about 2%. Even after it's had this good run up, I'd say that's a pretty good result for the stock price. We'll see how it goes tomorrow. And no doubt Firefly will be a hot stock on traders' screens tomorrow as well. We'll see how that finishes the week. Also in news today, we had the president sign an executive order allowing private equity and crypto into 401ks, American retirement accounts, which have a huge ocean of money. No doubt that is going to be supportive of private equity and crypto, helping to give a little bump up for Bitcoin here, 117,000 a coin. Doing even better, Ethereum, which looks very likely to test and break out above that key 4,000 level, as it's just breaking out now as I speak on the relative value to Bitcoin. Not doing so well today, healthcare stocks. Trump coming after Big Pharma, ordering them to lower their drug prices, threatening whopping tariffs up to 250%, the highest rate on anything we've seen so far. Going to start small and dial it up, put the pressure on them to produce pharmaceuticals on US soil and bring drug pricing in line with the rest of the developed world, as Americans pay far more for the same drugs that the rest of us do, even though it's American pharmaceutical companies producing them. And that's why the healthcare sector has been the worst performing sector in the market this year. Something I warned about late last year, knowing that Trump and his new team were going to come after Big Pharma. And in fact, we've now got the healthcare sector actually taken out the lows from the April sell-off, when most of the market has recovered. And so still a chance it may bounce here at support. Could still be potential swing trade long, but definitely on edge here technically. If it takes out the support zone, that will technically be a lower low, confirming a downtrend. Doing a lot better is the defensive sector of utilities, which are actually just a few points below all-time highs. And could be an interesting weekend coming up, as Trump's put the squeeze on Russia to sign a ceasefire agreement by Friday with Ukraine, trying to get a peace deal going over there. And we may actually see the two leaders meet up next week, which would be a key moment, as they're already making diplomatic efforts on both sides to reach out. Otherwise, if we don't see that, the US admin's likely to dial up even further pressure on Russia and Russia's customers, with the latest being India, threatening big tariffs on them for buying Russian oil. But looking at crude oil, it doesn't look too worried at all. It's actually gold that's breaking out to brand new all-time highs again, briefly getting up to 3,500 an ounce today, helping gold miners to break out as well, one of the strongest sectors out there. And just wrapping up, looking at the market, we have had a bit of a retrace this week from Friday's down move, just sitting below all-time highs. And technically speaking, if we take out that bearish engulfing candle at 64.27, the high it made last Thursday, that would be a bullish sign for the market. Otherwise, you can often see that, a bearish engulfing, it'll come back, retrace halfway or so before potentially rolling over again. Is a little mixed looking at the sector trends. Got some weak sectors, got some strong sectors. And just looking at my sector breadth table, it's actually utilities, head and shoulders above the rest actually, when it comes to the percentage of stocks in that sector above key moving averages, and actually energy is the weakest, which we can see on the chart. Does look pretty soft here. Otherwise, it's still really mega cap tech driving this rally, holding up there really strong, while small caps and other sectors are still lagging a bit behind here, and only a little over half of all stocks above their 50-day average. So the market outside the mega cap tech 7 is a little soft and consolidating, and we'll just have to wait and see what tomorrow brings us going into the weekend. Thanks very much for tuning in, and I'll see you back here again this time tomorrow. Cheers.